So what do breakouts of congestion zones look like on an actual chart? Well, this here is the Euro-Dollar 4-hour chart. Okay, and this is a price action of September last year up until around October, November of last year. Okay, now the reason I've picked this particular chart is it really highlights a chart where the trend is up. Okay, so that's the first thing, but there really aren't many pullbacks here. Whereas with the counter trend lines, we're looking for a pullback in the price action for us to get back into the trend. Sometimes, as I said earlier during the PowerPoint slide, you don't get those pullbacks. So how do you trade it if you don't get a pullback? Because if you don't get the pullback, you don't have, an area of interest, so to speak, where you can look for a candlestick reversal pattern or a price action reversal or something like that. So how do you trade it? Well, what you do is you look to contain the price action of that particular congestion zone, and you literally just play the breakout of that congestion zone. So what I'm going to do here is I'm going to put in 2 lines, and I'm going to follow this chart up and basically show you how you would trade these opportunities. So to start with here, first of all, we get a move to the upside. We've got major momentum move to the upside. As you can see here, these candles don't really pull back. They don't sell off during the consolidation period, so to speak. So what we do is actually we just bracket this range here, okay, and we look to trade in the direction of the trend. So we're looking for a break to the upside only. When we get a break to the upside, we enter on a break of that. We place our stop below at this point here, okay, so just below this line here, and we look for whatever our profit target may be at that particular time. Again, we can see that this breakout up here led to another little bit of consolidation, so there isn't really a pullback. When you look at the context of the price, the only real pullbacks here are this particular example here and this up here. Everything else is a congestion zone in one way or another. Alright, so right here we would then contain this price action. Now there's a few things that you can do here. First of all, you may want to contain the major price action. Okay, sometimes the high and low doesn't make all that much sense. So you could use the high as the high of this particular congestion zone, but then by the same token you could look to see where the price reacted most, which is this level here. 1, 2, 3 candles reacted to that level, and trade the breakout of that particular high there, with your stop below the low. But obviously that's a little bit more aggressive. If you want to be more conservative, you use the high. So okay, we've got this high here, and you wait for a breakout of that high, and you place your stop below the low here. Alright, and then again, this particular level, that's not a congestion zone, that's a pullback. This here we would consider a congestion zone. Okay, now remember, we're only looking to trade in the direction of the trend, so thankfully we would have been kept out of this particular spike down here, and that's the reason we look to trade in the direction of the trend, because more often than not, a trade in the opposite direction to the trend is, it's going to be lower probability than a trade in the direction of the trend, as this proves to be here. So we've got a little congestion zone here. This is where the price primarily has been reacting to. Okay, we take a break above that level there, so we would have been in on that spike there. We place our stop either below the low of this congestion zone or below the spike of this candle here, depending on what that spike was. If that was just a new spike, then perhaps it isn't reliable, as this particular level here, which has been a resistance area, and it's been support twice. So 1 candle, 2 candles has found support at this particular level, and perhaps you might want to put your stop below the low of these candles here, as opposed to the low of the spike candle. But, there's conservative and aggressive approaches, and it's sort of each to their own. So I'll leave you guys to make up the decision as to how you would play those particular levels. We have another congestion zone here, which is a little bit more difficult to play, okay, because ultimately you get that initial price action there with these few little candles over here. You get a breakout to the upside, and then you take on a lot of heat before the price moves off significantly in your particular direction. Alternatively, you then go there and you contain the price action again. So this would be your congestion zone until you get the breakout to the upside of this particular candle, then it roars off to your profit target, and you place your stop below. Okay, so it's not really rocket science here. All I'm trying to show you is how you deal with the price action when you don't get the pullback. Okay, because my primary entries really, if I'm being honest, are trading the breaks of pullbacks. Okay, so the resumptions of the trend. This sort of price action here, the breakouts of congestion zones, I only use when I'm forced to use it. Okay, so you'd only really get this when you're in a strong trend and the price really isn't pulling back. So here, we're in a strong uptrend and the bulls are firmly in control. There's never really a point here where the bears are in control of this particular chart. And for that reason, you don't get the pullbacks during the quiet periods. You know, you don't get the big sell-off, so to speak, when the bulls are taking profit. Instead, the market just goes sideways, which really, you know, that's really a positive sign, because it shows us that the bulls in this case are firmly in control of this trend. Because even when they take profits on their position, the bears aren't confident enough to come in there and sell there. So the price remains around the high of that particular level, of that particular consolidation, or of that previous move, so to speak. All right. So as I said, we're looking for the breakouts of congestion zones. We can see that over here, we would have taken a breakout over here, and so on and so forth. And that's how you play the breakouts when you don't have enough of a pullback in a particular trend. All right. Now, you don't get as many of these opportunities to trade, if I'm honest, but this is just to highlight how you trade them when those opportunities do arise. All right. Thank you for watching the video. I'll see you in the next module.